Hi, welcome to ArkIntel. What if the world's largest oil exporter, a nation synonymous with immense wealth and bold ambition, is on the verge of economic reckoning? Saudi Arabia, long hailed as an economic powerhouse, now finds itself in a precarious position. Despite pouring billions of dollars into futuristic cities, global sports ventures, and massive tech investments, the kingdom's economy is still tethered to oil. Growth forecasts have been slashed, the economy has almost slipped into recession, and the global oil market no longer offers the safety net it once did. At the heart of this struggle is Vision 2030, Mohammed bin Salman's grand plan to transform Saudi Arabia into a diversified, innovation-driven economy. Yet, with oil prices hovering far below what the kingdom needs to balance its budget, cracks are appearing in this ambitious vision. Could this high-stakes gamble to reshape Saudi Arabia's future fall apart before it succeeds? Or is there a path to escape its dependence on oil? Let's break down the state of the Saudi economy and uncover the challenges it faces in delivering on its bold promises. Saudi Arabia's economy is inseparable from oil. It is the world's largest exporter and among the top producers, with oil accounting for an overwhelming 90% of its export earnings and 80% of its government revenues. Even beyond those numbers, oil directly fuels much of the remaining 60% of GDP, as government spending drives nearly all domestic economic activity. The problem is clear. This dependence leaves Saudi Arabia vulnerable. Oil alone cannot provide enough jobs for a rapidly growing population, and the volatility of global oil prices makes it a risky foundation for the future. Vision 2030 was designed to address these issues, aiming to diversify the economy and reduce the kingdom's reliance on oil. But turning such a vision into reality has proven to be a monumental task. Diversifying an oil-based economy is far easier said than done. For Saudi Arabia, it requires building globally competitive industries that are not propped up by oil revenues and creating a robust domestic economy fueled by consumer spending rather than government subsidies. However, significant barriers stand in the way. Unlike many other countries, Saudi Arabia doesn't have traditional export industries to lean on. Agriculture is limited by its harsh climate, and the manufacturing sector remains underdeveloped due to a lack of infrastructure and workforce readiness. Tourism has been identified as a potential growth sector, but cultural restrictions and geopolitical tensions has made it difficult for Saudi Arabia to position itself as a global tourism destination. Adding to these challenges is the structure of the Saudi's labor market. 2/3 of employed Saudis work for the government, and their wages are largely funded by oil revenue. This leaves little room for private enterprise to thrive, making it difficult to stimulate organic economic growth. Non-oil GDP has increased in recent years, but the numbers tell a misleading story. Much of this growth is driven by government investments in large-scale infrastructure projects and high-profile ventures, which inflate GDP numbers without creating sustainable industries. Non-oil exports, a crucial measure of true diversification, have stagnated despite billions in spending. This disconnect highlights the difficulty of building an economy that can stand on its own without oil subsidies. Saudi Arabia's approach to managing its oil wealth differs starkly from that of Norway, another major oil-producing nation. Norway saves most of its oil revenues in a sovereign wealth fund, investing them slowly and strategically over decades. This cautious strategy prevents overheating the economy, which often leads to inflation and asset bubbles. Saudi Arabia, by contrast, has chosen an aggressive and rapid transformation. Vision 2030 aims to achieve dramatic changes in just a few years, including increasing the private sector's contribution to GDP to 65%, cutting oil's share of exports in half, and generating 50% of the country's electricity from renewables by 2030. This accelerated timeline has introduced significant risks, including the potential for economic overheating. The UAE's property bubble, fueled by rapid investment and speculation, serves as a cautionary example of what can go wrong when an economy grows too quickly. The kingdom's ambitious goals come with a hefty price tag. In 2022, the Public Investment Fund, Saudi Arabia's sovereign wealth fund, spent $30 billion, making it the highest spending wealth fund in the world. This figure is expected to rise to $70 billion annually by 2025. The PIF has funneled money into everything from solar energy and gaming to luxury developments and even a national coffee brand. At the same time, overall government spending has surged by 50% compared to 2016 levels. This spending spree has had a profound impact on Saudi Arabia's finances. The kingdom's break-even oil price, the price needed to balance its budget, has climbed to an eye-watering $96.20 per barrel. For context, this figure historically hovered around $60. Meanwhile, global oil prices have remained stuck at around $75, leaving Saudi Arabia with a significant shortfall. Saudi Arabia's ability to control oil prices through OPEC has diminished in recent years. The rise of non-OPEC producers such as the United States, with its shale boom, as well as Canada, Brazil, and Guyana, has fundamentally altered the global oil market. Increased competition has kept prices lower, reducing Saudi Arabia's influence. Efforts to raise prices through production cuts have met resistance within OPEC+, as poor member countries struggle to afford reduced output. Some members have even left the group altogether. These dynamics have left Saudi Arabia's financial reserves under pressure. The Public Investment Fund PIF's cash pile has dropped from $50 billion to just $15 billion as of September 2023. Despite the unprecedented spending, many of the Vision 2030's flagship projects are falling short of expectations. The much-hyped Neom City, a $500 billion futuristic development, has faced delays and funding challenges. Saudi Arabia's forays into global sports, including investments in golf and football, have been scaled back amid skepticism about their long-term viability. These setbacks underscore the difficulty of turning bold ideas into sustainable realities. Saudi Arabia has attempted rapid modernization before, and history offers a cautionary lesson. In the 1970s, sweeping reforms were introduced to modernize the kingdom, but they came to a halt after the Grand Mosque seizure in 1979. Conservative backlash forced the government to abandon its modernization efforts for decades. Today, Mohammed bin Salman's reforms, such as allowing women to drive and abolishing the religious police, have already created tensions with the conservative clergy. To prevent history from repeating itself, MBS is relying on massive spending to keep the population content and limit the political space for opposition. Saudi Arabia isn't on the brink of financial collapse, but cracks in Vision 2030 are becoming increasingly visible. The kingdom's heavy reliance on oil, unproductive investments, and an aggressive timeline leave it exposed to significant risks. Add to this the pressures of a changing global oil market and the road to a diversified economy looks steep. Will Saudi Arabia overcome these challenges and deliver on its promises? Or will the weight of its dependence on oil and the strain of rapid transformation prove too great? Only time will tell if Vision 2030 becomes a blueprint for the future or a cautionary tale.